This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Wednesday, April 22nd, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and be sure to get to it during the show. Overnight markets are May corn up 1.5 pennies at 4.55 1/4. May soybeans are up 2.5 at 11.77, and May Chicago wheat was up 0.5 at 6.05 1/2. No export sales announced here this morning, but I did want to make note that they did correct an export sales announcement from yesterday. 316,600 metric tons of corn was shipped to sold to Mexico, 65,000 being for 25 and 139,600 for 26. And then also added was 120,000 metric tons of corn to unknown destinations, and that was for 25. So those were in addition to what we announced there yesterday. Jack, let's pull up our leaderboard here. We've got some exciting stuff going on. The AgYield NextGen Foundation National Scholarship Competition. So so this week we had on the corn side for crop conditions improved by one percentage point from the previous week, still below the previous year there. On the soybean side, pretty putrid, 38% in the good to excellent category, which is significantly lower than the previous year's 64%. Moving on, there was also a USDA report on the corn side, a bearish surprise. The national yield was increased to 168.9. The average trade estimate there was looking for 164, so that's a pretty significant pop there. And then also a shocker there on the ending stocks number, going to 1.85 versus 1.585 for the average estimate there. So pretty bearish report on the corn side. A little different on the bean side. National yield dropped to 39. The average trade estimate was looking for 41, and ending stocks are continue to dwindle there. 164. They were looking for a number closer to 205. So tale of two tapes here between corn and beans. And if you look at the pricing environment, it certainly tells a story. Corn dropped 12 cents to 386. No change on the basis side there. The soybean price, however, rallied another 58 cents. They lost 10 cents on the basis, so it's 65 under, but futures are at 13.23. So nothing changed on the individual growers' expected yields for either the county or their expected yields, which gives us our leaderboard. Wyatt Lovelady from the Iowa State University stretches his lead over Trace Copper from Tabor College there in Hillsborough, Kansas. Trace is fighting strong against the Iowa schools here so far. Derek Goff from Iowa State University moves up a spot to the third position. Forrest Innis maintaining his hold inside the top 5. Drops a spot to 4. He's from the University of Iowa. And then moving up into the 5th spot, Landon Reinke, Iowa State University, moves into the top 5 final scholarship position there. But surging up the leaderboard, Allison Mayman from Iowa State University, she moved up 4 spots yesterday here to move into 6th spot. Kyle Durst dropped a couple to the 7th place at Iowa State University. And new to the leaderboard, first-time participant in the top 10, Jean-Claude Neo-Mugabo from the University of Nebraska-Lincoln. So good showing there. Caitlin Stoller from the University of Wisconsin-Platteville dropped a spot to the 9th position. And Carter Davis, he's been in the top 10 for a good majority of the competition. He's from the University of Illinois. He dropped a couple of spots there, but still maintains 10th position. The spread between 5th and 6th, the final scholarship position, $9,295. So still a lot to be figured out here in the next couple days. We will be announcing our first grand champion in addition to the rest of the top 5 here on Friday morning's War Room. So be sure to tune in there. And as we've seen, there is still plenty of volatility to come with this competition. So that's all good. What we know here this morning, guys, we got Iran firing on 3 ships overnight. They seized 2, so certainly not calming down there in the Straits. President Trump extends the ceasefire between 3 to 5 days, which interestingly enough could fall over the weekend again. So a lot going on here. Dustin, give us a few thoughts, what you're thinking about, what's on your mind, and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, I think it's hard to guess what's going to happen next, right? Like they said that President Trump actually said yesterday the likelihood that he would extend the ceasefire was unlikely, and then here we go again with the extension. So I think you just got to go back to the facts, and the facts are that the Strait has been closed for 52 days, and there's a mounting backlog of energy supply that's not meeting its destination. And so far through reserves and some rationing, that's not been a problem. I heard a report this morning, China's been actually exporting a lot of its huge stockpile of reserves. But eventually we do run into an issue, and I think that's my concern on this, is that like the next 3 weeks are certainly not as important as the previous, or certainly more important than the previous 3 weeks. So we continue to go forward here, and I still think that it's in everyone's interest that they'll see a peace deal, but I'm not holding my breath for it. And I think that's why corn is back to 485, highest since April 7th again last night. I think that the commodity markets are taking notice. Crude oil is back above $90 a barrel this morning for the June contract. Brent touched 100 yesterday. Until we get some sort of resolution there, I think pre-seasonal elevated prices for grains is still what I kind of expect. So,
very good, Ben. What's on your mind this morning?
Obviously a lot of stuff going on outside markets. I'm still kind of focused on what we do for option expiration. Certainly some constructive price action over the last few days in corn. I think if I was going to guess right now, I think we're going to vacillate a little bit here between, and I'm talking July prices now, 57 and 72. Maybe we've moved the range higher for a while. But there's still, there's still a lot of old crop out there. Spreads have been, kind of stabilized a little bit. So just watching. Interesting chart formation in corn, a rising wedge, and that can typically would be considered bearish if it ticks out to the downside, which I wouldn't rule out with first notice day next week. And potentially we catch some people. We're the cheapest corn in the world again, so we're seeing that business in daily sales. And I don't think corn is going to run away from anyone today until we see maybe some sort of more threatening weather. But you can't discount. We're really in an uncharted place with what's going on in the Middle East. And when you read the blurbs about airline fuel and canceling of flights, things like that. I talked to a guy who had connections in Australia yesterday. They're very concerned. They have a problem now. What you don't think of is they're having a hard time getting ships to come there because they don't have fuel readily available to send them back with, which I know sounds counterintuitive, that you could unload some off the ship and put it back on the boat. So I'm aware of that problem, but they're concerned about being able to plant and harvest pretty soon. So the ramification of this mentioned, the last few weeks, that it's probably somewhat delayed for ag. But you're in a place where you have, and I hate to use cliche, but you have an evolving black swan that you don't know which way it's going to evolve. So head on a swivel and stick to the matrix.
Very good, Justin. I think every day goes by. I mean, you've made the point numerous times. It feels like we're slightly desensitized to some of this stuff that is going on. I mean, 3-4 weeks ago, if bombs were hitting boats, it would have been a completely different reaction than what we saw overnight. So maybe share a few thoughts here this morning.
Yeah, I mean, it's just, it kind of, at risk of sounding like a broken record, right? I mean, I think volatility is going to stay here. I do, think that for sure we've been desensitized. You know, I think it's just fatigue. I think it's trader fatigue. And I think we've all gone through it. You know, you just get kind of burned out on trading headlines and choppy markets. And so I think you just, you know, you got algos that'll trade it, and option players and people will trade it. I think it's hard for anybody to get a strong conviction. You know, I think that's why you see this kind of chopping around, and you got to break enough like corn to run to actual demand, physical buyers, which I think we've done. And then you rally to levels where there's physical sellers, right? So I think that's kind of the chop. And then there's traders in the middle that, are obviously trading it, but, to get a big conviction here, to Ben's point, you just don't, and I don't know how you can, so you just got to kind of pick your points and, in my opinion, decide what this price means to you, and what's, if you say, okay, we could be at a risk of, Chinese negotiations falling apart, think about the worst case scenario of things that could happen. If that were to happen, how would you feel with how you're sitting today? Not to oversimplify it. And if things in the Middle East made, supply crunches happen, and ag all of a sudden got really nervous about production out forward, and we had a big move up, how would you feel about how you're sitting? I don't know how else to look at it at this stage. There's not a no-brainer trade here, in my opinion.
This might be a dumb question, Justin, but do you think with like funds always being focused in the front end of the market, that they're maybe nearsighted is the wrong word, but that they're not, like the back end of the market, your point has always been like, that's where the problem is, right? Like for us in fertilizer and all that.
That's where the problem could be, I think, and I think we saw that, right? You saw the initial run up, when crude was up $20 that night, and the front end, everybody bull spread corn and beans, and rightfully so. As time went on, those spreads widened, and July D's corn, for example, made new lows after that big move, after the funds loaded up, because I think enough smaller traders, enough commercials, that works its way out over time, right? They bear spread and move positions, and the cash flow starts happening, and you go into deliveries, and all that stuff works out over time. In the short run, yeah, I mean, you go by 200,000 contracts of corn in the front month, it's going to go up versus the other months, right? And that's always been the case. Now the velocity and the size of these funds have definitely gotten bigger each and every year. And I think just the sophistication of, not necessarily AI, but just computer programs, computer trading programs, that money moves quickly to stuff that's got action. Same with stocks, right? If a stock starts getting a lot of attention, more, they allocate more money to trading that. So when there's stories and things happen, I think that's part of the reason we move so fast now. I mean, I just think it's amazing, like equities, for example, how much they'll, have these big breaks, act like crap, and in 7 days they're at contract highs, like all-time highs. It just shows how much money is there. So, I think I think money for ags right now is just kind of on the sidelines. There's some obviously invested in going into the growing season, and there's a contingent in there that's just long, because of inflation or whatever reasons they may have. If you got into a real story, I think there's a lot of money that would flow into our products. We just don't have that story right now.
To the point, we have a farmer who's long, right? We don't know how long he is over 2 crops. We have managed money reasonably long. It's not burdensome. I think that the next part of this is we have an end user that for the better part of 2.5 years could be very complacent and let it come to them. And they have to get spooked in order to say, we need to secure our supplies now. I look at corn at, 455 in May. And if I was someone who used corn, I would be trying to own as much of that as I could and be full, because I think your risk in D's corn is, 50, maybe 60 cents to the downside. And who knows on the upside if all the things go wrong. And I think that end user has got to have some nervousness to come and get forward coverage. And we did see last week, I think for the first time I've ever seen 3 crop years in a row that had some flash sales. So I think that's where it's got to come from. And I don't know that we're there just yet.
All right. Got a couple minutes here, Ryland, real quick. Moving over into livestock. It's been a week since we posted those highs in cattle. So kind of setting back here a little bit, and then a solid spot cutout and cash markets finally supported the hogs a little bit yesterday. So what are your thoughts here this morning?
Yeah, cattle actually saw a little bit of cash trade at 246 yesterday, which was kind of a surprise overall. But we were seeing this pattern, a higher start kind of to the first part of the day, and then just pretty aggressive selling in the latter half, and open interest down, almost 1,600 contracts. It just feels like there's a little bit of a liquidation going on right now as cash market starts to kind of falter here. It's not unheard of at this time of year to see that kind of setback, pretty much in both cattle and hogs, for that matter. But overall, it just kind of feels like that outlook is souring a little bit. And so I think you've seen some of the premiums kind of come out of the board here. I mean, obviously the beef market is still really strong here, with kill running about 8,000 head behind last week. So we saw a box beef choice up 262 yesterday, back up to 386.28, and select at 387.20. That's up 359. So just these really big moves in beef caused by this restricted slaughter, and it just feels like overall the tone of the market is still very weak. Testing averages at the 25-day, which has typically been one of the bigger buying areas of a lot of the specs and managed money. So we'll see if we try to hold that here today. And on the hog side of things, gapped higher. Finally, some good action in the hogs. I like to see some follow through. Cash market was up just a little bit, so we're up about $2 for the week so far at 92.65. So a little bit better of a cash sentiment right now, I think, going into the week. Like to definitely see some follow through, just because this thing's gotten beaten up so bad. It's a little bit oversold. On the other hand, carcass down 86, bellies down 587. So just the meat market still just kind of chopping around here, still waiting for kind of a seasonal breakout over the next several weeks. But overall, it is nice to see a little bit of a short covering rally here.
Very good. Appreciate the update there, Rye. We got May corn here. We just opened up a penny, 4.54 3/4. May soybeans up a penny and a half here, 11.76 1/4. And May Chicago wheat's down half at 6.04 1/2. Tomorrow morning, we will have weekly export sales. Those will be out at 7:30 Central. We'll take a look at those and visit about that in the war room. Also, link is in the description, but check out the War Room report. Gives you a deeper dive into all the things we talk about every morning here on the War Room. Access to premium content. We'll put out reactions to USDA reports, special reports throughout the year. So check that out. Also, a portion of those proceeds from the subscription goes to directly support the AgYield NextGen Foundation, which, of course, is putting on our national scholarship competition, supporting the next generation of ag leaders. Check it out. Really cool. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like. Certainly subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day. We'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content, all for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.